Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet Microcap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet Microcap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet Microcap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engine so that more folks can also discover and engage with all things microcap stocks. Registration is now open for our next event, the Planet Microcap Showcase, taking place in Las Vegas at the Horseshoe Hotel and Casino, formerly Bally's, on April 25 to 27, 2023. Expect 3 days of networking, company presentations, one-on-one meetings, in short, a lot of fun. If you follow our community and especially invest in microcap stocks, you're not going to want to miss this. Expect more announcements on speakers, sponsors, presenting companies as we get closer, but be sure to register in order to get those announcements as well as to attend. So in order to do that, please visit www.planetmicrocapshowcase.com. See you in Vegas. Now for today's show, I invited on David Wanger, founder and CEO of ShareIntel. Since the start of 2023, I've started seeing more news releases saying ABCD company reports on ongoing investigation into potentially improper and illegal trading activity in the company's stock. This was a first for me and a trend that I wanted to understand better. Is this the same fight as the AMC GameStop short squeeze that galvanized retail investors to fight back against Wall Street? If so, are select microcaps taking advantage of these same retail investors? The idea being that Wall Street is potentially illegally naked shorting our stocks to come join us in the fight. Or are there select microcaps utilizing tools like ShareIntel to genuinely understand what is happening in their company's stock in order to do something about it, protect long-term shareholders, or perhaps stop the bleeding because they'll need to raise more growth capital, which will already be dilutive? I invited on David to help me understand all these questions and more. So thank you again for tuning in to the Planet Microcap Podcast, and please enjoy my conversation with David Wanger. This episode is brought to you by Stream by AlphaSense. You can find them at streamrg.co/PMC. That's STREAMRG.co/PMC. Stream is an expert interview transcript library that is starting to become an integral part to investors' research process. They have a number of interviews on a wide variety of companies, including TMT, consumers, industrials, real estate, and more. Stream provides over 300 expert interviews per week, and 70% of their experts are found exclusively on Stream. Stream is unlike any other transcript libraries. Stream integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Stream's community of experts and thought leaders partner with Stream to build their professional brands and expand their industry influence. Right now, there are approximately 8,500 plus call transcripts available. For more information, please visit www.streamrg.co/PMC. That's STREAMRG.co/PMC. David, thank you for joining me today. How are you doing?
I'm doing well. Thanks for having me.
Absolutely. So let's dig right in. The reason I was inspired to invite you on today, I mean, look, we've known each other a long time. I've known about ShareIntel for a long time, even done a demo to better understand the tech. And the reason I wanted to have you on today is that I've seen a number of news releases starting in 2023 with headlines like, and I quote here, ABCD company reports an ongoing investigation to potentially improper and illegal trading activity in the company's common stock, noting that they've hired your firm, Share Intel, to do the following. And I quote here, they hired you to report on its ongoing investigation to potentially improper and or illegal trading activities, including naked short selling of the company's common stock. So I want to start here. For those that don't know, let's quickly define what naked short selling is, and then why is the discovery of a naked short so important to the issuer?
Yeah. Okay. Well, let's start with this. Okay. Naked short selling as opposed to illegal naked short selling. Let's make that distinction, because market makers have an exemption in order to maintain orderly markets that allow them in certain instances to be naked. Okay. But illegal naked short selling is what all the hoopla is about these days, and not so much these days. It's been going on for years and years and years. The consensus amongst industry thought leaders, Wall Street experts, is that this is been taking place to a huge detriment of our capital markets. And there are lots of complex topics in and around why this is happening, why it continues, what the regulators are or not doing about it. But in very simple terms, illegal naked short selling is an illegal naked short sale takes place when the broker dealer that is on the receiving end of a sell order, a short sell order, does, and this is the most common form of what I see from where I sit, illegal naked short selling, where the broker in a fast market where trades are going off in gigaseconds, and they have a valued client, right? That they want to be sure and process that order, because they're all competing for the same business. They all have valued clients. They are taking advantage of the rule, which states they have to have a reasonable belief that in good faith belief that they can locate those shares, okay, to borrow those shares and settle that transaction come settlement days. Well, that trade gets done in a fast market to satisfy the relationship, and they hope by the end of the day that they're going to find those shares. Well, the end of the day comes and they don't find those shares. And maybe T+2 comes and they don't find those shares, and then so the first extension kicks in, and then now they've got 14 days to find those shares. And if they don't find those shares, well, guess what? That trade went off regardless. It now creates what's called an open fail to receive, open fail to deliver, settlement fail, and in reality, these settlement fails get pushed down the road. Don't want to get into how that's done. There's a multitude of ways, that IOU in effect is kept open. But suffice it to say that the money side of that transaction settled. The purchaser of those shares on the other end now can see that they own those shares on their statement. But in actuality, what has happened is it's created a phantom or a counterfeit share, which is often the term assigned in today's world. So our system, Share Intel, we've got a compliance-driven software as a service that essentially looks for the markers, okay, of these fails in what's referred to often as aged fails. Make sense?
Yes. So then, right now, I started off this whole interview with like the types of news that's been putting out that's been now happening quite frequently. I think to your liking, building the business, as we were joking offline, take 20 years to be an overnight success. Why is the discovery of a naked short really so important to the issuer? I mean, it sounds obvious even when I ask the question, but let's make it clear to those that are still kind of unclear as to what the nature of the relationship is right now.
Well, let's get back to that scenario, all right, where that trade was done. If there was not a share, right, a legitimate share to borrow, if it wasn't located properly, then what you have in effect is an artificial supply, right? So in that scenario where there's an artificial supply, and I'm constantly telling CEOs, CFOs, C-suite executive boards of directors, no amount of effective IR, PR, hard work, roll up your sleeves, and knock it out of the park fundamentals can overcome an artificial and endless supply of stock. right? If that supply is artificial, your borrow rate is going to be artificially low, which keeps the short selling game alive, right? It's meaningful for all of those reasons, not the least of which is it's dilutive, right? So it's dilutive. It's creating artificial pressure on your stock, thwarting the ability to create true price discovery, and that's where we can help.
That's the main point I wanted to get to, because at the end of the day, when we're trying to think through, okay, why is a company? The real question is, my stock is getting shorted. Whether it's illegal naked or not, my stock is being shorted. The price of my company shares is now going down, whether artificially or not. I want to better understand what the heck is going on. I mean, is that the real question of the nature of what's going on right now?
Absolutely, yes. And I think more so that it's more so than just my stock is dropping and I have a high short interest. When you have companies releasing the best news they've released in a year, okay, and it's the moment they've been waiting for, and they're all excited to release this news. They release the news, stock runs for a minute in time, and then all of a sudden by the end of the trading session, it's traded 10 times their float, which is almost impossible, and the stock closes lower. Okay, so where did all that selling come from in the face of best news the company's ever put out? That's what starts to raise eyebrows. Intuitively, a guy who's worked his whole life to get where he is and make this news announcement says, what's wrong? Something's broken. And that's where we're brought in.
So what do you say to let's say, some of my investor audience who listening to this, they're long-term value-focused type investor, maybe looking at companies that are either generating a profit, cash flow positive. I've gone through some of the companies that have put out some of these releases. They're growth stage, I guess you would say, losing capital, which, hey, that at a growth stage company in microcap, that happens, right? This is part of the game. Majority of the companies in microcap are losing money. So what do you say to the investor that sees some of the companies that are putting out these releases? They kind of take a quick look at some of these financials, and even if the company's putting out more recently some of the best news that they've ever put out in their company, and yet they go and look at it, it's like, all right, why should I really care then? You see what I'm saying?
Well, if you're a long-term investor, then obviously you have some belief in either the underlying technology, the service, whatever we're talking about here, the fundamentals, the ability of the fundamentals to unfold and develop, and you're betting on management to some meaningful degree as well. What you're not betting on is this this abusive and predatory behavior that comes out of the Wall Street community, either from the hedge funds or those brokers that are facilitating the hedge fund business. And all of this predatory behavior obviously impacts the smaller companies who always have to be concerned about their cost of capital, because if they have to keep going back to the banker, back to the market, and raising money at lower and lower valuations, then that's disconcerting for everybody concerned. So it ultimately serves the short seller, in particular the illegal short seller, because at some point they're counting on investors becoming dismayed and disillusioned and saying, I'm just going to abandon this one because it's just too far gone. So that's where today investors are taking a step back and saying, wait a minute, I'm aware now that there are companies, and in particular our company, not many others. It's really us, and we've got this buttoned up and patented, but there are companies that can help. Okay, we can, as a matter of fiduciary best practices, I think, and that's where we live now, and it's a happy day that we're being thought of as a critical need to have fiduciary best practices to help C-suite executives and companies boards get their arms around this and identify parties to this chicanery. More importantly, as a trusted advisor, help them walk through the action steps in how to leverage not just our analysis, but but gain the benefit of a lot of the relationships I've developed over the course of the last 20 years, including the top attorney in the space who uses us exclusively, Wes Christian, out of Houston, Texas, and others, in transfer agents and whatnot. I mean, we've become a trusted advisor in this area. We're in a position to help advise, who your transfer agent should be, who your banker should be, who your IR people should be. It's a happy day for us, obviously, but we're in a position to help and make a difference.
Right. So, I mean, look, and I did an interview with not that long ago with one of your clients, Agroforce, shortly after that they announced this news. And the interesting thing that Ingo, the CEO, when I asked him about, putting out this news and why, it was pretty clear in the earlier part of the interview, they're going to need more growth capital in order to accomplish some of their goals, right? Whether it's growth through acquisition, whatever, they're going to need to eventually raise more capital at some point. So it sounded like the whole idea, and you're basically, in my opinion, it seems like it's not that there isn't an awareness of like, we know where we're at in our business. We know we're not maybe necessarily making money yet, but the market's not giving us a shot in some respects, where we know we're going to have to go out and raise more capital. We know we need to establish more banking relationships in order to accomplish some of the goals that we're going to do. But it makes it impossible to do that when you have illegal naked shorting and, all this completely depressing the stock to the point where we potentially have to close up shop before we can even really get started. Is that some of the thought process there? At least if you had to look at it from a positive angle.
Exactly. I mean, how can a CEO, how can the C-suite, whatever the board, best protect their market cap? And that's where we come into play. A lot of, in simple terms, a lot of in addition, a lot of that, those same individuals are looking at it as kind of cheap insurance. But increasingly, this is all being driven by an awareness level that really, didn't exist, 10 years ago, 20 years ago, except for a handful of individuals in the know, like myself and some others. But shareholders now, are in the wake of the GameStop saga and some of the other meme stocks are really, putting pressure on the management of public companies to get in the fight and put an end to this, because it's predatory behavior that is impacting our capital markets. The NASDAQ was always known, for rewarding innovators, right? And the American values, hard work and innovation. And it's disillusioning when you have companies, that list and fall prey to all this really, ugly predatory behavior, which only benefits really a handful of billionaires that are behind all this. So I don't know if that answers your question.
Yeah, I mean, it's interesting because on one hand you have it's interesting because when I see the news, when the company puts out this news, one of the questions that I have going through my mind is, well, why would you publicly announce this? Is this on one hand it's like, okay, we want to let folks that are watching the stock or current shareholders know that, hey, we're doing something about this. Or is it a way of it's kind of CYA, cover your ass, of the company's not doing that great, whether there's naked short selling or not, we're at least doing something about it to see what's going on. If there is a mechanical reason for why the stock is is where it is, how do you think about that?
I think it's all of the above, quite frankly. I think it's all of the above. I mean, I had a call from a CEO of a public company, the other week, who basically said, "Listen, I need to get you guys involved. I've heard a lot of good things about you. There's obviously a lot of press. We're actually the subject of one of the subjects in a full-blown Hollywood HBO movie called Gaming Wall Street. So I mean, there's a lot of attention called to this, and in this instance, the CEO called and said, "Listen, I need to sign your services just to get me out a contract." And don't need to really even go over it. This is based on a referral, but it's really based on the fact that I want to attract a real key anchor investor to this deal, and he's not going to invest unless ShareIntel is involved. So, wow, I mean that's so are we the new good housekeeping seal of approval? That would be a great situation if that's what's developing here.
What if after they hire your service and they see like, all right, there hasn't been any kind of illegal naked shorting, it's just a bunch of people are shorting the stock?
Great question. Great question. And those are my favorite clients because again, it falls under that category, fiduciary best practices. If we can confirm that we don't really see any indicators of illegal naked short selling, they're very happy to hear that. They're very happy to hear that, and they keep us in place, on an ongoing monitoring basis. Because, by the way, when this ugliness surfaces, if we're not in place at the time, data not captured is data lost. FYI. So if a company's not using a service like ours, and this sounds a little self-promotional, but a service like ours, then they're really not in a position to to monitor what's the critical broker-dealer shareholder movement that takes place in the minute of one of these sort of bear raids. And that you had CEO of a fairly well-known company recently stated in an interview that I met David Wenger, I met ShareIntel a couple of years ago, and at the time, I thought I had better use for the money they're charging, which is not a lot, but at the time I made a decision as an executive to deploy those resources elsewhere, and he stated publicly in an interview that's gone somewhat viral that the single biggest mistake he ever made as a CEO was not hiring ShareIntel. So for those companies that come up clean, that's a happy day for everybody.
I mean, is it for the CEO? He's probably not long for the job if stock is just getting depressed and there isn't like they don't have the thing to point to right now. It's
it's a happy day for everybody as long as the company is doing what they need to be doing. If they have earnings visibility, earnings momentum, and the stock is fairly priced. If the stock has been depressed, and I have to tell the CEO that, listen, this is just selling. This is ordinary selling. People don't have any confidence in your company. Truth or known, you probably shouldn't be public. I've had those conversations.
I mean, I don't mean to laugh, but I mean, at the end of the day, like I'm placing myself in that boardroom, like when that CEO has to, it's just,
I believe me,
natural.
It happens, not often, but it happens, and they're not too happy, obviously.
Yeah, no, I get it. I mean, what's your feelings about when the companies, once they hire you and then they put out this news, in some ways, because I've seen on Twitter, I've seen some folks put out there that like, this just seems so weird to put out this kind of news. Why even have to announce it? Is this just a way to promote the stock in some ways? What's your feelings about it?
Well, we go out of our way to determine up front whether or not we can sniff out the company that wants to hire us to make an announcement and get a pop in their stock. We don't want any part of that. Okay. But at the end of the day, if somebody is clever enough and probably says all the right things that they think they have to say to get us involved, we do insist on being part of whatever news announcement or reviewing whatever news or PR announcement they want to put out, at least to have those safeguards in place. But at the end of the day, we can't stop a company. Vast majority of companies hire us don't necessarily make announcements at all. And those are the kind of companies we really want to have on board. Others, I think, probably feel the need, and again, back to that pressure from this sort of groundswell of, the Reddit, the armies of apes, to get in the fight. I think they're answering that call in many respects.
There's a big difference though between like what happened with AMC. I mean, those are two extremely well-known brands, right? I used to go to GameStop and buy some games every once in a while. AMC, obviously, go and see that. That almost feels like, when looking back in when that was all going down, almost like an enigma. and being able to kind of like that being kind of the thought process now that you're applying to, some of these microcaps that aren't name brands, that are just kind of trying to grow their businesses, and now is, trying to rally that retail support behind them. Like, hey, the same chicanery that was happening to GameStop and AMC is happening to us. Like, this isn't fair. Like what, like try and help me bridge that gap.
I'm not sure exactly what you're asking that I didn't already answer. This is maybe one of those
fair enough. Okay. I mean, no. The reason I went there is because it's like, when you're talking again, when you're thinking about AMC and GameStop, right? Like those, at one point were, doing great. They're still existing. They, whatever. I'm not here to comment on what was going on from corporate perspective and how they were allocating capital, all that kind of stuff. But when you're thinking about what happened within that, and then now applying it to some of these businesses that don't have the same kind of name recognition, that are still kind of in that growth area, it's just interesting how I guess there's been this trend of like, all right, as a maybe a short seller, that's your investing, that's the game you want to play. It's like, okay, I'm going to stay away from what's going on in these more name brands. I'm going to look now at some of these more liquid microcaps that don't have the same name brand and, are still consistently losing money, similar to what we saw with AMC, GameStop, and there might not be that same retail army coming to the defense of these more no-name stocks versus what happened with the other ones. You see what I'm saying?
Well, I do. And again, I go back to the awareness level that I think is there among the investing community, the retail investing community that wasn't necessarily there before, prior to GameStop, and I think that awareness level is carrying into all of the investment decisions that are being made now. The assumption I think from the investment community, the retail community, which is not always the most sophisticated audience, is that hey. These guys all talking. I don't have time to spend on the chat rooms, whatnot. But I think there's quite a bit. You could tell me. You could tell your audience better. What kind of buzz exists out there, and what kind of investor communication is out there among some of the microcap companies in your world.
Absolutely. So another question I have for you then. Let company hires you. What's the difference then between uncovering the naked shorting and then actually doing something about it?
Yeah. So listen, it all begins and ends with an understanding if this is happening, right? So if we can confirm that there's a strong likelihood that this is happening, then there are a whole series of actions plans, that can be deployed, which we are uniquely suited as a trusted advisor to help identify and put to work. Again, as I mentioned before, we become a trusted advisor in warp speed in today's world. We're in a position to help small companies understand, better who their banker should be, who their IR people should be, who their PR people should be, who their transfer agent should be, and there are all kinds of measures that a company can take, pre and post, market abuse. I think what's really interesting to me now is the preventative side of all this. That's a whole nother topic. I mean, we're starting to start the companies even before they go public now, which is a really exciting thing for us, by the way.
Sure.
If you can imagine having Share Intel wrapped into the mix on day one, of trading. So, but to more succinctly answer your question, it's really a case by case basis. There are a number of things companies can do. They don't want to have to necessarily split their stock or issue a special dividend or change transfer agents or CUSIP numbers, but there's a whole range of things that we and one of the things we do is help identify participants and maybe go that route and help them put pressure on the participants to adhere to the rules. Not just, by the way, not just the short sell rules that from where I sit that are being, shall we say, gamed. From where I sit, the broker dealers are playing loosey-goosey with the reporting rules as well, not just short sale rules. So, we are a team of Wall Street professionals, probably 200 plus years with experience in our hallways that are uniquely suited to help root this out and act as a trusted advisor to take action and leverage our analytics.
So, have you found any particular kinds of stocks getting naked shorted? Is it depend on exchange? Is it industry? Or sector? Love to hear more there.
If you asked me that question 10 years ago, 15 years ago, I would have told you that companies, smaller companies with a high burn rate, biotech in particular, those companies that really have a long way to go were easy targets. But as this game, sort of unfolds over the years, we've done work for $30 million companies, $300 million companies, and $30 billion companies, believe it or not. And they've gone right up the food chain. Okay. So wherever they can make money, they do. And so there's no necessary rhyme or reason. There's no one sector that is impervious. Okay. To this nonsense.
And what usually happens after the naked shorts and the shorters are exposed, in your opinion, or from what you see?
Well, if we're out there helping companies one at a time. So if we can help companies, sort of get their particular situation squared away, force the naked short sellers to focus on, there's thousands of other companies to go pick on out there. Let's help them go pick on another one and leave ours alone. That's really where we're coming from right now. I will tell you that years ago I approached the SEC, with the idea that we should be part of a macro solution to this problem. I still believe we are to this day, and we're working with some very high level industry thought leader types to actually sort of walk some of our recommended solutions into the hallways of Congress at this stage, because we don't feel, a lot of these industry thought leaders don't feel like that this is ever going to get solved by the regulators until there's an act of Congress, some legislation in place.
I mean, is there anything that a company can legally do if they've uncovered that there is some illegal naked shorting happening? Is there any recourse that they have?
It hasn't been necessarily successful for many of these companies to approach the regulators. I know that's counterintuitive, but it's what I've witnessed. It can actually backfire. A company can actually shoot itself in the foot and invite an investigation on the company itself. So we've worked. I know it's insidious.
I was gonna say, like, what's stopping the shorters from like, okay, cool, you announced that you hired Share Intel, great, like, bring it on.
Yeah. Well, at the end of the day, okay, I mentioned earlier in the conversation, earlier in the interview, we work with the top attorney in the space, okay, and he's not shy about prosecuting these cases. And increasingly, you're seeing a lot of awareness now, as I mentioned earlier, from this CEO roundtable that's formed, a lot of whom have hired Wes and Share Intel and another individual, actually also Tom Ronk of Buyins.net. They're serious about going after this, and I think Wes has the ability to make people wake up and pay attention, and I think at the end of the day, if companies gather the evidence, if you will, and at least put themselves in a position where maybe in lockstep, maybe in a class action, can whatever resources need to be deployed. I know Wes takes a lot of his cases on contingency. That's another conversation for you and he, if I can arrange that if you like. But the reality of the matter is you got to get in the fight. These companies have to get in the fight, and we're obviously a key and critical part of getting in the fight. We believe, and as does Wes, and at the end of the day, I think these companies, a lot of these companies have to posture themselves in a way that would let the Wall Street community and their investors at large know that they're not going to sit idly and do nothing. I mean, it's those companies you want to avoid for sure. They're just going to stick their head in the sand, so you don't want to be. Go ahead.
I was going to say, David, and look, I'm asking you some tougher questions. I appreciate you're being very candid, and I really do appreciate it. And one more follow up on that point though too is like, what would you say to, let's say you had an investor telling one of these companies that there was maybe some suspicion that there's some illegal short selling going on. What if they were a long-term shareholder that was in it no matter what, and they said, you know what, just go run the business. Don't get bogged down in this, because it's going to take you away from really what you're trying to do, which is run a business and grow this and really take it to the next level and enact that strategy and vision that you saw for the company. Like, if you continue to deliver the share, it'll take care of itself. Like what would you say to that investor?
Real simple. In a word?
Sure.
Naive. Wall Street will take you out to the woodshed and punish you if you're not paying attention. Okay. Your cost of capital, if you have to go back to the well and your cost of capital, if you came public at $5 a share, now you got to go back and raise money at $1 a share to go forward. And then at another date, 10 cents a share, game over. Whatever it is you thought you were doing and building, you're done. You've lost. You've lost. Okay, Wall Street wins, you lose, and it's unfortunate. But until there is legislation to help correct what's broken in our capital markets, the C-suite executives, board of directors have to wake up and pay attention. Yeah, they have to face reality, and that's what's happening. That's what you're witnessing. It's this awareness level now, and we're here to help.
David, it's funny because we've known each other a long time, and I've always understood ShareIntel as a company. It's almost like you got, for better or worse, kind of dragged into this situation.
Exactly.
Versus, hey, we built out this tool to help public companies so that they can better understand who their shareholder base is, to understand who's a friend, who's a foe, like really have better shareholder communication. And yet here you go. Now you're part of this dogfight for most of these companies.
I didn't get in this business to become a thief catcher. I sometimes wonder what kind of big picture things are at work here. Does the big man upstairs have this in mind for me? I don't know. We just got funneled into this, and they haven't let go, and here we are after many years. We've got a lot of tricks up our sleeves and a lot of tools to help companies get their arms around this, and so be it. That's what we're doing, and we're fighting the good fight. We wear the white hats. We're on the side of the angels, and
absolutely. And David, what? My final question too, you mentioned quite a bit here how, it will probably take an act of legislation to stop this type of transaction, this illegal short selling. What would you say would be that tipping point where you might actually see some movement towards some sort of regulation on this front?
Well, I think you have to have the right Congress, and maybe we do now. Okay. And I think you have to have the right spokesperson, which we do now. I won't mention his name, but as it's been described to me, Washington, they understand the law. The lawmakers understand the law. They don't understand the capital markets. And, there are those that would step forward and are about to, I believe, and make the case for the American people, to Congress, that this is actually a national security issue. Our capital markets are broken to some meaningful extent. Okay, this is as big a national threat as what's happening on the border. The fentanyl coming into the country, the energy crisis, all the rest. And I think when that message, gets out there, and I think the time is right for that, with this groundswell of awareness that at the retail level, the Reddit community, as I mentioned, the community, that all could come together, and create the perfect storm for change. And I'm optimistic that can happen. We're closer to it than ever, and let's see.
For sure. And I also want to close out this interview by saying, look, again, from the get-go, what we've been talking about is illegal naked shorting. We're not talking.
Right.
This isn't us coming out here and saying that all short short sellers are bad. Like some of the best investors I know are short sellers. Like really do absolutely incredible work.
Healthy short selling is creates liquidity. Plain and simple. There's
Yep.
nothing wrong with healthy short selling at all.
No. And so I wanted to also make that clear because, again, some of the best investors I know are incredible, they're short sellers and they do some really quality research that really helps also take to task some companies that may have been high flyers and nobody, took a real look under the hood. We're talking, and I think that's where this whole conversation kind of gets convoluted because on one hand, it's like, okay, we're talking about illegal short selling, then it's like, okay, well, let's look deeper. Let's look at the companies that are really going after this. All right. Like what is the quality of some of these businesses? Why are they doing, so that's really why this conversation is so fascinating to me. And, David, what's some of your closing thoughts on this conversation that now has been really birthed as a result of this wider awareness around illegal naked shorting?
Let's watch. Let's see. We've got some very high energy industry thought leaders that are sick of watching this happen. Let's keep our eye on that and hope for the best.
Very good. All right. Well, David, with that, where can our audience go and find more information on ShareIntel?
www.shareintel.com.
Very good. David, thank you so much for joining me today. I really do appreciate it. Good luck. Stay safe. And I really look forward to our next update. I'm sure we'll have many conversations moving forward.
I'm sure we will. Thanks a lot, Bonnie.
Thank you. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet Microcap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.